If you want to become a profitable trader, you have to learn price action. Not only that, you have to understand market structure. We are going to break down everything that you need to know in this video, because you can't simply go off and trade one pattern or one indicator and thinking that you're going to become a profitable trader. I've been trading and traveling for over 10 years now, and I'm helping traders directly one-on-one to become a profitable trader. Just last week, James was now funded with his $100,000 account, and another guy, Jonathan, he was messaging me on social media saying he's now been managing over $400,000 and taking regular payouts from his account. So you are in the right place. You aren't listening to some 19 or 20-year-old trader telling you how to make $1 million in a week. There's going to be no subtitles or flashing images jumping across to keep your attention span watching this video. If you want to become a profitable trader, these are concepts that you have to understand. I appreciate if you take this time to like the video, subscribe, and if you have any questions, let me know in the comments below, and you can always reach out to me on social media at MoneyballAustin. Let's get straight into it, shall we? So these are the topics that we're going to be talking about. Now, I have these written down on a sheet here in front of me so I can kind of keep track of what the most important topics, but these are all things that as a price action, market structure trader, whatever you want to say, you have to understand what is discretionary trading. You have to be aware of news and fundamentals. These are all things that we're going to get into, talking about indicators, candlesticks, understanding impulse move and corrections, okay? What are other traders thinking versus other traders? Who's taking the opposite side of your trade? These are all things that have to register in your brain while you are trading. It's not good enough just to follow one head and shoulders pattern or one engulfing pattern. Like for example, like if you go to Google, you can't just simply, I got this right here. You're never going to make money consistently, just strictly going off of a one candlestick pattern. So if we look at here, there's so many, I'm not going to get into them, but if you are looking for, I don't know, what's one of these, a shooting star pattern. If you just look directly at the markets and you say, oh, look, there's a shooting star pattern on the 5-minute time frame, I'm going to go short. You're not going to make money consistently. There's zero edge to something like that. And the best way to explain it, if you want to make money doing this, is you got to be baking a cake. All right. In order to bake a cake, what do you need? You need sugar, water, egg, flour. You need to preheat the oven to like 365. You know what I mean? There's like 5-6 things you need in order to bake a cake. Trading is exactly the same. You can't just go strictly off of a head and shoulders pattern or an ascending wedge or a descending flag pattern or a engulfing pattern stick or I don't know, a bullish market divergence, whatever. There are already indicators out there that will automatically take trades for you. As soon as this pattern candlestick is there or this indicator lines up, boom, it will take a trade. Truth is, it doesn't really have an edge. You'll be a break-even trader, which is congratulations. You're better than probably 80% of the traders out there if you're like a break-even trader long-term, okay? But you're not going to make money consistently. So what we need to do is we need to bake a cake. And that's one of the things that we're going to keep coming back to. And you're trying to create an evidence, a stack of evidence to say prices are going in one direction versus another. That's one of the biggest concepts I want you to understand here when we're diving into these markets. Don't just look at one indicator or one chart pattern. You can use these things, but don't just look at one thinking, oh, we have it there, it's going up. That gets my first talking point out of the way, talking about, just understanding that. We're trying to bake a cake, all right? And so one of the questions I get is from people, what is the best time frame sequence I should be using? Okay, what is the best market? How many markets should I look at? Okay, I'm going to pop open a screen, a picture right now. I'm going to pop that on the screen. This is going to work for every different time frame sequence, whether you are a long-term position trader, a swing trader, day trader, scalper, whatever. There's time frame sequences that you want to use, okay? But understand there is no magic time frame. The second thing I'm going to get asked a lot is, what's the best market to trade? Well, to be honest, you can trade any market that you want. You could look at currencies, you could look at the indices, the stock market, the futures, gold, oil, option stocks. It's the same thing that's going on all these markets. Crypto, if that's something you want to look at, it's the same thing. The next question I'm going to get asked a lot is, should I be focusing on 1 to 3 markets versus 20 markets? Pros and cons to each. The pros to be looking at just 1 to 3 markets is you're going to get to know that market extremely well, and you're going to learn how to trade it in and out. You're going to know different days, how it reacts, the different fake outs it might use, the different setups that work really well on that market versus a different market. Okay, you're not going to be very overwhelmed. That's a lot of the pros to trading 1 to 3 markets. Okay, but one of the cons is you might not get as many trade setups. If you actually look at most profitable, like most successful traders, they're all trading 1 to maximum 3 markets. Okay, so start with 1 to 3. If you want to add more and trade that, by all means, but it's a lot easier to trade 3. I personally trade 3 now. Okay, the other flip of the coin is people like want to look at 20. Sure, if you're going to look at 20, you can become a very mechanical based trader and you can require a lot from a trade setup. Just to understand, a con to something like that is you might be dealing with information overload. Okay, so now let's start talking about price action and market structure. Okay, you have to learn this type of stuff. And this is one of my light bulb moments, is understanding how prices turn. All right, and you're always going to hear people say higher highs, higher lows, structure points, right? That is very true. But what I want you to understand from something like this is that price turns from inside out. What do I mean by that? Well, I want you to understand that prices are going to turn from lower time frame to higher time frame. So it's the same thing here on, say we're here on Euro USD. When prices were coming down here on this daily time frame, it was going down. That's going to be lower time frames, lower lows and lower highs. That's what the lower time frame is going to look like, right? If we are going to have price rally all the way back up here on the daily time frame, understand that on a smaller time frame, there's going to be a change in character. And what I want you to understand when it comes to markets turning and market structures changing direction is at some point, there's going to be this transition period that goes on from a downtrend to a sideways market to an uptrend. All right, this is what I want you to pay attention to. If there's anything that you pull out of this video, and this is one of my bread and butter ways of thinking, and we're going to dive deep into this. If you're going to see structure changing, going from down to up, at some point, this is going to happen on smaller time frames. It has to happen like this. If you can prove me otherwise and say that's not how prices turn, I'll issue you $1,000 bounty on something like that. Okay, but still to this day, 10 years, nobody has proven me wrong on something like this. This is how prices turn. It's going to make lower lows from lower highs to going sideways to making higher highs and higher lows. It might not look picture perfect like that, but there's going to be a transition period where we start breaking structure, as in breaking downward trend lines, right? An indication that price is starting to slow down is we start breaking trend lines, all right? We start losing momentum in the market. That's prices starting to turn, slowing down. That's an indication that prices are starting to turn, and you're going to catch this when we start looking at the markets. But this is the concept that you have to understand, okay? So if we looked here on Euro USD on the daily time frame, let's just look at this example because I was talking about it. Prices were going down. It's going to turn on, say we're looking at the daily, so we probably want to look at the 1 hour. We talked about this near the start of the video, talking about different time frame sequences depending on what style of trader you are. Every single market, it's the same thing, all right? On 1 hour time frame, we are making lower lows and lower highs, lower lows and lower highs. At some point, we're going to start breaking downward structure, removing opposing pivot point zones and breaking momentum lines. So in this case, we eventually over here, we started removing that pivot point zone, but we also broke this downward momentum line, this trend line, down at that point, all right? Maybe we made a new low, maybe by like a point or two, it made like a new low at this point. Sure, if you want, we could draw that in if that's something you want, all right? But at some point, we're going down, all right? We start going sideways, breaking that trend line. That's an indication of price slowing down. All right, this is a very important thing to understand about timing your entries because like I said before, we don't just go short saying, oh, look, there's an engulfing pattern, we must buy. No, we can use that, but we have to time our entries based off of a higher time frame analysis, timing of the markets, right? And I'm gonna grill into trade reviews and this is really good stuff. I'm going to break it down very easily for you to understand, but this is even like this whole video topic that we're talking about, price action, understanding market structure. It's a concept that I even tell my traders that I'm working with. at the start. Don't think about it too much until you're a month to 2 months in, and then you can actually move on and watch this video, because they're going to have a better knowledge of the overall markets and how prices are turning, how they move, once they learn the core trading strategy, right? Because you want to have a core trading strategy by itself, right? But at some point you have to understand discretionary trading. What are other traders looking at? What is the market structure? How is price turning? What are the news and fundamentals? These are all things that you have to understand, and we are going to dive into it. But like I said, I'm going to break it down as we go, but this is hands down the most important concept that you have to understand. Okay, so it's the same thing. If you saw price in a sideways range on a 1 hour time frame, say this is a 1 hour time frame, and for the last 3 days it's been sideways, I wouldn't just go short straight up. I would not go short straight up and just say, oh, I'm going to go sell right here, right? And then just hopefully just trade it down to the bottom. Chances are you're not going to make money. Like I said, going back, you can't just trade one pattern straight up. You're not going to do well. There's already indicators out there. There's already things out there. But what you want to be aware of is using that higher time frame and understand where price is on the big picture. Okay, so if you're using a higher time frame being like a 1 hour, trading a range, well then you definitely want to be aware, like, hey, the last 3 times prices were up there, it's sold off. The last 4 times it was down here, prices rallied from there, right? So it's probably not a logical idea at buying this here when prices come back up here. You probably don't want to be sitting there buying, thinking, oh, look, I got a bullish engulfing pattern. Oh, I got a hammer candlestick, a bullish hammer. Why would you do that, right? Just based off of the past 3 days of market structure on a 1 hour time frame, this is where sellers tend to step in. Now, I'm not saying you can't. I'm not saying you can't. Like I said before, we have to adapt into the market of what the market is doing. We're going to get back to this. This is really good stuff. But you have to understand what is going on in the first place, okay? So we could start looking for selling opportunities. Maybe at this point you're like, okay, we're high on the range. Maybe what I want to do is I want to go down to a 5 minute or a 1 minute, and I want to wait for confirmation. What is that? We talked about this 5 minutes ago. What's an indication of price turning? Higher highs, higher lows breaking, right? Going like this, right? Maybe at that point, once we start breaking structure and we start making lower lows and lower highs on a smaller time frame, that's when you start getting short, right? And you enter a short at that point, and then you have your stop above the whole structure. We're going to talk about entries, stops, trade management, all that later. Some traders might go at this point saying, hey, I'm high up on the range. I want to be looking for selling opportunities, but I want to wait for a stochastics RSI overbought. So in this case, let's just say, for example, I think I have it right here. Let me turn it on. So, oh, it's kind of perfect. It lines up. So at this point here, so let's imagine we're right here. Prices are up high. This down here that you see at near the bottom of my screen, stochastics RSI is overbought. Okay, it's overbought. I want to see this thing turn. Once it starts to turn, that's when I'm going to enter short. Not only that, I want to see a bearish engulfing pattern to the downside. Now, once I have a bearish engulfing pattern to the downside, once I have the stochastics RSI overbought and it's starting to turn, once I have prices up at the top of the range on the 1 hour time frame, now I can start getting short. So I got like these 3-4 things lined up. That's baking a cake to say I have these 4 or 5 ingredients. Statistically, 65% of the time from this point onwards, it's going to go down. All right? Just because I have them, don't get caught up. Just because you have them doesn't mean prices have to go down, right? Don't get caught up in marrying, oh, well, I have these 3 things, right? You could have a good trade setup and it be a loser. I take good trade setups all the time and they're losers, okay? But more times than not, they're going to be a winner. Some traders are looking at that. But now we might have other traders saying, I'm a breakout trader. Breakout traders don't sell up here when it's high in the range. What they're waiting for is they're waiting for prices to break out to the upside. But I'm going to wait for prices to break up to the upside, and then I'm going to get long, okay? There will be some traders doing that. There will also be traders trading the breakout retest. So once it breaks out, I'm going to buy this area now, calling it a breakout retest. All right, they call this a breakout retest. It broke out of the range, usually in a very strong fashion. We're actually going to talk about this setup. They're buying the retest back into it, and then they get long from there, hoping that prices go up to the upside. Okay, once again, maybe from this point onwards, here, once they get the breakout retest, they're going down to a 1 minute or 5 minute time frame, and they're waiting for a bullish engulfing pattern. Maybe they're waiting for a hammer reversal. I don't know. A pin bar reverse. I don't know. There's so many out there. There's 200. I have like 3 or 4 that I like that make sense to me. That's why I keep listing them. But there's so many different out there. There's so many different chart patterns. Every trader, after enough time, they're going to start to see these different ways. But it's very hard just to look at a book, to talk about it in a video, and then you just instantly remember. But you're also going to have the ICT silver bullet going up my bumhole trading strategy. Those guys thinking, oh, this is a liquidity search stop hunt of all the traders. And what they're going to be doing is they're going to be selling this, thinking all these idiot traders are going to be trapped. All right. And so they're waiting for this thing to shoot up, fake out everybody that's trying to short this thing down. They're going to get stopped out. The people buying the breakout are going to lose because it's going to reverse. And from here on this point onward, it's going to fake out, breakout. What do they call it? The fake out, breakout, liquidity. I don't know. I don't know how they come up with these names, to be honest. And then they short straight up thinking, oh, look, it broke the structure, it liquidity surged, it stopped everyone out. Now it's going to make its true move. That's another way that traders will look at this way, right? So you can see that there's a lot of different market participants in the market coming up with their own analysis, right? You go to a baking contest, okay, that's definitely one analogy I could think off the top of my head. You go to a cook-off and you ask everybody, you get 20 people to bake a cake. They're all going to be baking a cake, but there's going to be different kinds of cake, and I'm sure they're all going to be delicious cakes. People like different types of cake because it suits them. Maybe some people are allergic to nuts, so they can't have the nut-filled cake. Maybe people are allergic to chocolate, so they don't eat chocolate, right? Lactose intolerant. I don't know. Find what works for you and stick with it, okay? But what I'm trying to get you to understand is there are many different ways to participate in the market. There are many different ways of traders are viewing this market, okay? Confirmation, understanding of we're trying to build a cake, okay? So far we're talking about there are many different traders in the market looking for buys and sells depending on their trading strategy. It's important to build a cake, right? That's all I'm going to say. Okay. And the other thing when we first started this video is talking about confirmation. All right. Confirmation. Understand that structure is going to turn from inside out. All right. Structure is going to turn from inside out. Man, this is really good. We are going to dive into the live markets, and let me break down to you what my thought process was today. Okay, because we always got to consider what other traders are looking at and adapt into the market. That was another key thing, adapt. We always have to be adapting into the market. We have to be aware of what's going on, market conditions, okay? So today in gold, all right? So let me give you my thought process today, okay? And we got a lot more. We're going to be talking about understanding news and fundamentals, strength and weakness, impulse corrections, stops, discretionary trading, understanding trends and momentum, higher highs and higher lows, the closes of these candlesticks. It's all really important. So we're going to start diving into the price action. So like I said before, we start by looking at a higher time frame. Now gold, I'm very bullish gold. Long term, just long term, big believer in it. I like it fundamentally long term. Not only that, inflation has got a lot worse over the last couple of years, as we know. So gold has been on quite the rally. So why, with that in my mind, why would I want to try and swing short? We'll talk more about this later, but like if you see a market that's very strong and for like the whole year, why would you try shorting a very strong market? It's probably one of the stupidest things that you can do. Now you can short a strong market, but it has to be very low time frame. Okay? It has to be very low time frame. I'm not going to go off and sell 1 hour or 4 hour or daily swings on gold. Okay? I'll look for swing longs, but I'm not going to go off and swing short. But for today, I was actually looking for shorts. Why? Depending on the time frame sequence that I was looking at. So long term, based off of like this, 1 hour time frame, I'm actually very bullish this. But there are certain key areas that when I come to this chart, that I want to be looking for buying opportunities. The first thing I do is I was going to draw my trend line, just connecting it to pivot points. You know, pivot points is one of like the key things, and we talked about it during confirmation, and it's one of the biggest things that traders need to understand. And when understanding pivot points, these are pivot points, all right? So what I want to see is peaks and valleys like this, peaks and valleys, peaks and valleys. That's what I want to see when I'm drawing these trend lines, all right? That's what I want to connect it to, all right? And upward momentum lines like that, and downward momentum lines like that. What I'm not going to do is I'm not going to go like this. I'm not hyper-focusing in individual candlesticks and going like, oh, well, then prices rallied here, it dropped here, then it rallied, it broke that high. I'm not going like this. I'm not doing that, all right? There's a big difference between that and what I was just drawing out here. That's just going to let me know the speed of the market, which is extremely important. We're going to touch back on the speed of the market later. But why I was looking for longs pre-market. And I'm going to draw like a support and resistance. I kind of like supply and demand and drawing out some support and resistance line. This was a pretty major area on my books here on the 30-minute time frame, I believe, because previously when we were up here, we sold off quite hard. And then we came up again, we tested, we sold off hard, and then we ended up breaking through. So a lot of traders at this point, when we actually pulled back here, let me draw this out so you can understand. It's important to understand the thought process and how it changes. All right. So here we had, you know, prices coming up, testing, testing. It broke through. This is like prices in a range, right? And then we break through, breakout, retest, right? This is how my brain is thinking. So once it broke through, came back down, tested, and then rallied up. Okay, this is a pretty major area when I got on the charts. Prices were coming back into this area here. So I want to be aware of that area. I probably don't want to look for selling opportunities when price is right here around this area, right around or near it. I don't want to be looking for selling opportunities, okay? This is a pretty major area. It's previous day highs. It's broken above it. It's been tested once, held, twice held, three times. On the third time it broke through, and like I said before, so when prices were coming down pre-market, I was like, okay, like I'll look for buying opportunities in here, but I don't want to just buy straight up. I will wait for confirmation, okay? So let's go down and I'll break through everything what was going through my thought process. At this point, you know, prices were, you know, going down into it. It held it, came up, rallied up. I'm not really expecting much. So this is a concept that you have to kind of understand, and we're going to keep coming back to it, is understand kind of, it's easy to understand, but it's something that you're going to have to pick up, is just understand of what the market condition is over the previous amount of time on the time frame that you're using. So in this case, the 1 minute, if I see the 1 minute chart, like this is why I don't like hyper focusing like this, saying what's price doing right now on the 1 minute. Like I want to be aware of like what's price been doing over the last 2-3 hours on the 1 minute, right? This is why multiple time frame is important. And so when I was going into this, I was thinking in my head, okay, like I want to look for buying opportunities at this point, but like I'm going to draw this out so that you guys can kind of see this. As you can see, it's like down, maybe up, down, like this. Okay, down, up, down. By the time price is coming at this point here, based off of this, like, you know, we get the move down and we get the move up, and then we get the move down, up. After prices have just made this move down, this is probably where prices are going to bounce from. So it's probably not a logical time to start looking for looking for selling opportunities, right? You would agree with me, right? It's probably not a good time. This is probably where buyers are going to step in, just based off of, you know, we're getting that move down, then correction, down, then correction. We just got this move down. Well, there's probably a correction at this point on this time frame that's going to occur, right? Not only that, this line that you see here on this chart is that support line / demand. It's actually support and demand on that 30-minute time frame. It's that breakout area. So I'm not surprised prices reacted off of it. That's an area where I would actually look for buying opportunities. Okay, now I'm not trading that chart during that time. I'm asleep for another like 20 minutes. Okay, but what I want you to be aware of is by the time prices touch this area and say prices rally up here, after it's made a rally like this, chances are it's probably, you're starting to think, let's think about this, guys. Like, going based off of previous, we're making like say a 50-point move down, a 30-point move return, 50-point move down, 30-point return, 50-point down, 30-point return. Okay, well, we just made this average return over the last 3 hours. We made this general pullback to how far it's been going. And we haven't removed any structure. We haven't removed pivot points. We've just made this corrective move. This is probably a logical area that it makes sense where sellers might be potentially stepping back into this trade, right? We're making lower lows, lower highs. We just made this average move correction. This is potentially an area where prices are going to make that next move to the downside, right? There was no buy setup. Maybe on a smaller time frame like a tick chart or a 10-tick chart, that's too small of a time frame for me, so no trading opportunity, right? But you can kind of see how some people might be trapped into thinking, oh, let me sell the breakout down here, when really it was reacting off of a really good support line. Probably not a good time to sell, right? Probably not a good time to buy after, given the fact that we just talked about understanding this market structure. Not a good time to sell, right? If we're going to buy, I need to see structure, right? I need to see that structure being removed, price turning from inside out. We never got that, okay? We never got that. So let's continue with my thought process. So at this point, prices are going down. I'm going to flip my analysis. So after we started breaking the structure to the downside and we actually started removing it completely, and we made a very bigger low right at this point, I'm thinking in my head like, okay, well, like, I definitely don't want to be buying anymore. Like, this complete area that it was reacting off of has been obliterated, right? Why would I want to be buying this thing when it's already smashed through? That's like prices in a sideways range, and then I'm thinking in my head, okay, I want to look for selling opportunities, but prices shoot up here, right? Why would I continue to look for selling opportunities after there's no more higher time frame confluence to my analysis, right? Now, I did see, that's basically what I was thinking. Now, I did see this here, as in, some people might see this as lower low, lower high, structure being removed. They're not wrong. Now, I don't trade the first 5 minutes, nor do I recommend trading the first 5 minutes. It's too volatile, it's unpredictable. I wait for it to cool down, okay? But yeah, I get it. There might have been a little buying opportunity. There's that structure being removed. But at that point, you know what? I don't have a higher time frame confluence anymore. So I am no longer interested in actually buying this, okay? I would instead be considering looking for selling opportunities. So this is when prices broke through. This is the open that I'm avoiding. At this point, we're lower lows, lower highs, lower lows. What I wanted to pay attention to is here at this point. So at this point, this was the zone that was holding from the open. It broke. Okay, so prices came up, tested it, dropped, and made a new lower low. This is really important for people to understand. We're making lower lows in the market, okay? Prices are now coming back up into a zone. I want you to see this, and I'll scroll in. Very important concept. This is understanding structure, right? This is a very important zone that I want to be aware of, okay? Prices came up, dropped, all right? Now prices are coming back up again, but now it's coming back into an area that previously dropped before. It's like lower lows and lower highs, right? Lower lows and lower highs. You would think at this point, ideally, you would want it to drop and make a new lower low, right? If it doesn't make a new lower low from this point onward, that should tell you the market is not as weak as it appears to be, right? So at this point, what my thought process is, and we're going to go back to it, guys. It's important to understand. Prices drop, rally up, drop. We go actually deeper. We go higher into this. But notice how they're pivot points. They're not individual candlesticks, okay? Pivot point, look at the drop, all right? We were unable to break that low. And in fact, we went up higher and actually went a new high off of, over this time period. All right, so this is price going like this, lower low, lower high. And in fact, we start going like this, right? This is that price turning from inside out, right? So if we look at this now, we can delete all this. Really important concept, really important concept. We break that downward momentum line, and we are going deeper into the zone, if not breaking it. So we're going up, breaking that momentum, going higher, and then we start breaking it, right? That is price turning from inside out. Why would I want to get short on a market that is now breaking downward trend lines and going deeper into these areas of supply. And some people might look at, volume, which is fine. Some people will look at volume down here and they want to make sure a large stack of volume is coming in. Some people might be looking at, say, this dome, the level 2 book, the level 2 over here on the right, waiting for these buyers or sellers to step in. People might want to see these orders being printed to the upside or to the downside to show that the buyers are stepping in. How big are the buyers, right? Or is it just a bunch of small traders stepping in? Is it a fake out? These are all things that traders can use to help them whether prices are going to go up or not. And just because you see it this way doesn't mean prices have to. It could have gone deeper and then shot down, right? But if we think about it like that, which is how prices have to turn from inside out, prices have to start breaking structure, right? Lower lows, lower highs. If we start, no longer supporting lower lows and lower highs like this, and we start losing momentum and going deeper into zones and creating higher highs and higher lows, that is the sign of weakness, okay? All right, so that was my thought process there, okay? And we continued on without me dragging this on because I've been talking about this for quite some time now. There was a time where I was then looking for selling opportunities because on the 15-minute, I'm interested in smaller time frames, so on the 15-minute, we are going back up into that area of kind of which I was now deeming kind of resistance at this point over here. But also on a time frame like this, on the 15-minute, I kind of had that as my downward trend line. This is the time frame that I see. This is where price is currently on the charts when I was looking at this. And I was like, great, I'm going to look for selling opportunities. Over the last 3 hours, we've been selling off. We are reacting off of resistance. We are hitting a downward trend line, momentum line. This is where sellers might potentially step in now. We can kind of see impulse, correction, impulse, correction, impulse, correction, right? Correction move just happened. We're reacting off of resistance. We are reacting off of downward momentum. Maybe stochastics RSI is overbought. Maybe price is breaking above the Bollinger Band. We want to look for selling opportunities. So now I went down to a tick chart, and this is what was happening. What are we going to see on smaller time frames? I was actually looking at a 50 tick. Now I don't trade 50 ticks, but I was looking at this on a 50 tick, and I saw this. What are price going to do? Higher highs and higher lows. Higher highs and higher lows. What's the evidence going to be, guys, if we see sellers step in? We are going to see structure being removed, right? Same thing here. Higher highs, higher lows. All right, so here, at this point, some people might be like, oh, well, we got the confirmation. Yeah, we got one of them. We got a momentum line, which is great. That's the first indication of price turning inside out. All right, but ideally, we want to see a pivot point and a momentum line being removed. All right, not just one, but two. That's an indication, though, at that point here, I'm thinking, great, the buyers aren't fully stepping in, right? Because a lot of traders are starting to look at this saying, okay, we've made this big rally over since down here, for the last 30 minutes, we've been rallying nonstop. Some type of relief has to come in. Anybody who's buying up in here is probably not the most logical buyer because they missed out on this whole rally, right? So probably not the smartest time to be entering a buy setup. This might be a good time to enter a sell setup, but I have to wait for these sellers to step in, right? Indication hasn't been there, right? And then let's just go like this. We have these new momentum lines. Some people might have a momentum line like this. Some people might have a momentum line like this. Oops. You guys know what I mean. Some people might have it like that. All right. I saw this a little bit aggressive for me, a little bit aggressive. I'm just going to draw this out now and actually delete this so that you guys can follow along. And then we're going to move on to the charts and talk about other things. Higher highs, higher lows, maybe short-term higher highs, higher lows. Maybe some people are looking at that as their confirmation right there. To me, I wanted to see personally this area being removed. That's what I wanted to see. I didn't get that. So, hey, maybe I don't enter the short pullback back into the zone right there. But hey, maybe this trader who was waiting for their little bearish engulfing pattern got their bearish engulfing pattern, right? Maybe the trader looking for their, I don't know, pin bar reversal, whatever they're looking for. There's 100 different things. That was their signal. They got short, whatever, okay? We really didn't get that, all right? So, oops. Oh, this is a picture. So we got that higher high, higher low, higher high, higher low, right? and then we start trending down. All right. That's kind of what I'm looking for on this. All right. I didn't really necessarily see the best setup that I like. The two that made sense to me was maybe that one, but it wasn't up to my standard. And then maybe the final one was actually the one I was targeting, was this one. I had my order pending there, but I just missed my entry. Because at this point, we were like this. Like that, right? And so that was the momentum line being broken. We removed this pivot, we removed this pivot, we removed this pivot. All right, with this strong move to the downside, let me delete that. With this move to the downside, that was my confirmation. I was trying to sell the pullback. Unfortunately, prices didn't come back and get me filled, okay? So that was what I was waiting for in the market. Unfortunately, prices just missed my entry. Hey, it happens, all right? So yeah, and you can see it goes like this, you know, higher highs, and it starts going higher, and it starts lower, breaking structure, same thing, right? And so you got to be kind of aware of what prices are doing scrolled out, right? Higher time frame, it all depends on the time frame sequence that you're using. But this is why I'm not a fan of hyper focusing and nitpicking what's been going on over the last 5 candlesticks and be like, oh, we made a higher high, oh, we made a new low. That really doesn't give me perspective in the market. This is why I'm more concerned about overall bigger picture of the time frame that I'm looking at. I'm more concerned about what's happening over the last 50 or the last 100 candlesticks versus the last 3. Okay? That's kind of, I want to be more aware of the structure of what the market I'm playing in. You know what I mean? Oh man, this is juicy stuff. Really juicy. So when I go to a chart, and this is the same thing that you should be doing, always start with your higher time frame, right? You want to come up with the analysis. Do you want to be looking for buys? Do you want to be looking for sells? Or do you not want to trade at all? Those are your 3 options, okay? Prices can only go up or down, so you want to stack the odds in your favor. So in this case, I want to look at, say for example, USD CAD. If I was looking at USD CAD, this is a market that I would really want to be looking for buying opportunities. So if I'm looking here on the daily time frame, I really want to be looking for buying opportunities right now. Why? If we look here on the daily time frame, in my eyes, I see this as a pretty obvious support line just across the board. All right, it's a very gray area too, because like people are like, at what point is the support line no longer valid? At what point is the breakout is a breakout a fake out breakout? At what point is this area no longer good? Right? It's a very gray area because there's no exact precise number. All right, because some people might have their line like that, some people might have their line like that. Some people might have the general area to say, okay, that's my demand, that's that area. This whole general area is a resistance. I wouldn't declare it broken until prices really, you know, actually have a strong move to the downside and like close down here. That's when I would consider it removed. Okay, we'll talk more about that later. But right now, where prices are currently, I'm thinking buying opportunities. All right, because the way that I'm approaching this, once again, I always start with a higher time frame. I scroll out. I want to get a better perspective of what's happening. So let me give you a thought process. Let me delete this too. To keep track of this, you'll see stochastics oversold. We'll come back to that in a second. It's just one extra thing. All right. So prior to my thought process many weeks ago, we were always looking at this being supply. This was a very nice supply zone. Like I said, there's an hour and a half long video breaking down my whole trading strategy completely for free. It's called my tips playlist. It will be in the description below. I'm not here to break into that, right? But my whole trading relies off of supply and demand zones, right? Everything relies off of where big buyers or sellers are stepping into the market. So if I'm using that as a area of supply, these were previous areas that I was looking for selling opportunities, right? Great area to look for sells. Great area to be looking for sells. Great areas to be looking for sells, right? At some point, this was removed and it shot to the upside. So that tells me a lot of buyers stepped in right here. In order to take out a zone like this that's been held once, twice, 3, 4 times, and then it just blows through, that's telling me a lot of buyers stepped into the market, okay? This was also a pretty good resistance area too. So that's why I'm going to leave this on as kind of a support line for the time being. Support / resistance, call it support here. But it's also now coming back into an area of demand, okay? And actually, we could even elaborate more on this zone, but going back to remember how we were talking about about 20 minutes ago, we were talking about understanding impulse correction, impulse correction, impulse correction. This is one of those instances where you would want to be aware of, like, impulse correction, higher highs, right? Higher highs, higher lows. Good area to sell. Don't get me wrong. We're sitting in supply, reacting off of resistance. Great area to sell, but I wouldn't want to be selling this thing until if prices react back off of this area, right? Because now I'm thinking prices are probably at this point going to go higher because it's making higher highs and higher lows at this point, right? It's a good time to look for buying opportunities. And the fact that it's going deeper into this, right? So originally, like, this was our zone. The fact that it came so close once, and it might even go into it here, goes into it here, and it keeps going deeper into it, but you notice how the reaction is getting smaller and smaller, right? So, like, that's our zone. So, oops. So if, like, let's go like this. If that was our zone, and we got prices going like this, you know, and keeps going deeper and deeper, you got to be aware of, you know, if prices make this type of pullback, one, it's not a good time to enter short. It's probably a good time to start entering longs, right? But the next time, because it's gone in this deep, this far, then this far, then this far, the next time it shoots up, it's probably going to blow through that. And a lot of people are going to try selling this thing. And so a lot of people are going to be trying to sell it. A lot of people are going to trade the breakout. There are a lot of different traders trying to trade this, right? So this is why I kind of like to move my trading around supply and demand, looking what other traders are looking at, breakout, retest, how I'm trading it. I trade all of these, right? I trade all of these setups, okay? But the core trading strategy of where are large amounts of buyers and sellers stepping in consistently, that doesn't change. Everything goes back to the core trading strategy of areas of where I want to look for buying and selling opportunities and looking for the confirmation, right? Nothing, remember, it's like baking a cake. Baking a cake. We're Gordon Ramsay out here, okay? So, yeah, it's probably not a good time to push sell, right? You're probably going to get a breakout shooting to the upside. I'll trade the breakout retest. So once prices come back in, I won't just straight up enter. I'll instead, you know, wait for confirmation, right? Then I'll get long. I will wait for bullish engulfing pattern. I will wait for some type of lower time frame confirmation. That's what I'll do. All right, but I don't just trade it straight up, right? Like I said before, I don't think it's good to just trade straight up individual candlesticks. There has to be more to your top-down thought process, okay? So, yeah, it worked out really well, okay? And eventually, you know, we came down, came up, came down, and we blew through it. In fact, we like blew through, came down, and then blew through completely, all right? But now we're coming back into this area. Let's talk about now, all right? Now we're coming back into an area, pretty good support, coming back into this demand zone over here. We are also above the 200 moving average, near the 200 moving average. I want to look for buying opportunities. Some people might straight up wait for daily candlestick confirmation. Maybe they're waiting for like I said before, some type of candlestick pattern on a daily time frame, or they might go down on a 1 hour time frame and they're waiting for confirmation. But at this point here, I would look to manage my trade. Like after prices have now moved this far, just based off of a 1 hour time frame, like this is once again tends to be where imbalance correction, we're going to go like this. We came back up, touch supply, we kind of go down. We could go like this if we want, down, up, down, up. This is kind of a time where you want to be managing your position of where you got long if you did. You know, still I'm waiting for, if prices go like this, right, and we break that downward trend line, okay, we still haven't done it really yet. Not on this 1 hour time frame. So we still haven't gotten that yet. There's still no confirmation for me. Maybe down there, if that's something you like, but I still don't see those pivot point zones removed. This is why it's such an important thing, and this is why it's completely free that I have on that YouTube video. I'll have it down below, the 1.5 hour long. The tips playlist, I call it. But that's what I'm waiting for. Unfortunately, I don't have that yet. But if prices shoot up like that, that's what I'm waiting for, and then I will enter a long position on the return with my stop probably going down there on something like that, right? But if you imagine like me getting long, very quick talk, we're going to keep coming back to this, like entries and stuff like that. Let's just imagine, like if I got long, let's just imagine I got long here on this type of zone. I think this was like a 30-minute or 15-minute confirmation. Yeah, so it was like 15-minute, 30-minute confirmation. It was slightly aggressive, but like some people might trade that as their zone. And maybe they don't even get filled. But let's just imagine they got filled. All right, let's just say they got long. They're laughing to the bank right now. I would be at least looking to manage my position, definitely by the time prices are probably reacting off of this area. That's when I would be looking to manage my position. At least either getting completely out of my take profit or at least taking half out at that point, right? Getting out at 2-to-1, in this case a 3-to-1. Some people might want to get out at like a 2-to-1, right? Because if you're asking for more in the market, you're going to have a lower win-loss percentage. I could get into this whole debate. Some people are really freaking delusional. People comment on some of my videos saying, I'm not even going to get into it, but some guy got upset because he's like, what's the most amount of trades you've lost in a row? I said, the most amount of trades I've lost in a row is 13 trades in a row. And he's like, that's insane. You're a horrible trader. And I said, well, what if I told you, you never asked any more questions. What if I told you I'm taking 4-to-1 reward to risk, right? And he's like, that's horrible. You should never be losing 13 trades in a row, risking 4-to-1. I'm like, are you freaking delusional? All right. Yeah, maybe over the courses of 20 trades, I could show you a 20 trade sample size where I won 80% going for 2-to-1. All right. I could show you that. But you want to talk to somebody who's been trading for 10 years. Yeah, honestly, 13 is not a lot, to be honest. It's actually really not. And if I was just going for straight 1-to-1 trades, like if it's like you going to a roulette wheel and seeing, 10 blacks in a row. It's a 50-50 chance. There's every time the odds of it hitting 10 times are like, I think it's like 1,000-to-1 or something. Like I don't really know the stats, but it's it's over a course of 1,000 spins, you're going to get 10 blacks in a row or 10 reds in a row, right? Hey, it's going to happen. You're going to take on winners and you're going to take on losers. You just have to be able to manage risk, right? And be aware over a large enough sample size, you're going to have larger drawdowns, right? But over the long term, your edge is going to play out, right? It's that simple. But people like that, very, very simple-minded. They're too used to watching the, 19-year-old millionaire lifestyle. They're smoking drugs every day. Like, I don't know. They're just horrible. They're just horrible people to talk to. So I'm here to talk sense into those people. But hey, if you disagree, by all means, let me know in the comments. I always appreciate the algorithm jump. That's the only reason I reply back to them. Because the fact that they watch something like that, which is great, but then they comment on something like that, which is even way better than somebody just watching. And so then I reply, and then they reply, and then I reply, and then they reply. Man, YouTube is like, man, must be a great video. This guy watched the entire thing 2-3 times, and he commented on it 4 times, and it's got great responses from everybody. And it's just pumping out the more people. This is why I love it. This is why I love it, baby. Anyways, so we're going to talk more about this, trade management and stuff like this, and we're going to talk more about that, right? But at some point after a 2-to-1 or even a 1.5, you're probably going to want to move your stop to break even because it's a salty feel when you get stopped out of a trade after prices go like 1.75. Like to me, like after prices go 1.75, like I move it my stop to break even, right? Because I don't want to get that feel. I might have a 2-to-1 take profit on my first take profit, but if prices go 1.75, then reverse and stop me out, I feel like an idiot. So at that point, I like to move it to half risk or break even at that point. Okay? I'll talk more about that later when we get into some trade reviews. But that's how I would manage a trade like this is, well, I'd be aware of like, hey, what's current market conditions doing, right? When are these buyers or sellers tend to be stepping in on this time frame? Right? Being aware of lower lows, lower highs, right? So that's something I want to be aware of. This is probably a good time to manage your position at that point, right? But given the fact, let it go for 30 trades and then you can review. We'll talk more about that later, okay? But let's just say, for example, prices did skyrocket up and remove this zone. Once again, that would be this type of setup. That's that type of confirmation. Well, then I would probably enter up there. I would probably want to have my stop below the whole area. That's something I would want to do. Some people might have their stop right there, which is fine. I don't see anything wrong with that, but personally, in this case, I might do it right there. I would target probably, you know, yeah. I then might go here and be like, because I need this area to be removed. I would probably target here as my first take profit at this point, but I would probably move it to break even after prices touch this area. So like, if you imagine, this is when I would be getting filled. Say prices rally up, prices come down, touch me into the trade. If prices get up here, like I'm probably going to move my stop to break even. I'm probably at this point going to move my stop realistically either to break even or to this area right here. So I'm going to like limit my risk, because I could see potentially prices at some point going down, retesting the area, and then going back up. It could go back down deeper and then rally back up. It could do that, right? But chances are, if it falls from this point onwards and breaks this zone and goes, because this is the area that it took off from, right? If it breaks through that zone, chances are it's going to continue on. Just based off of my trading and my experience, it's going to do that. So that's why I would personally move my stop from here to at least there at that point. If I feel like I think it's good enough to break even, I'll move it to break even, right? Maybe I'll move it to there, okay? But what I'm not doing is I'm not going to be constantly moving my stop thinking, oh, this is where it reverses. This is where it reverses. And I keep moving. I'm not doing that. Right? That's how you're going to lose your money. Okay? But maybe I get out of my first take profit probably around here, move my stop to break even at that point, and then I would have a second take profit probably sitting around this area up there, right? And so overall, if I win, I maybe get a 3-to-1, right? Something like that, with my first take profit out at 2-to-1, right? Maybe I just let it run and I go for a 5-to-1, maybe a 10-to-1, right? Because I know it's a salty feel. Like if I look here in this, I think there was like Sheer took some nice trades. Like this was a long trade that she took, talking about confirmation. We got the break of structure, long, right? Bought this long, got out at a 2-to-1. This thing soared to 10-to-1, 20-to-1, right? So that's a pretty salty feel if you see that type of movement. So having that second or third take profit that's small, it scratches that itch, if you want to call it. Remember how we were talking about troll trades? Troll trades are cool. Just make them extremely low risk. If you're normally trading $100, take them for $5, $10. You know what I mean? If you're trading $20, it's probably not worth taking it. Maybe open up a demo. If you think you can scratch that itch, take it on a demo. Maybe that's something over time that you introduce into your trading, which is discretionary, which is totally fine. Okay, but we got to get back on track. All right, these traders are doing really well. So if we look at Bitcoin, Bitcoin One for my cryptoers out there, let's talk about this, because this was an area that I really like, that are valid for shorts and longs. So prior, we were looking for shorting opportunities when prices were coming back up into a zone like this. In fact, let's talk about what's going on now, because that's what people want to know. This is going to be an area that I really like for buying opportunities, but this is also a really nice area that I like right here. Okay, now let's talk about this area. Why do I really like this area for buying? Because structure. I love trading zones that, if you'll notice, like say for example, like support and resistance, like supply and demand, like coming back into a zone like that, that's broken previous structure, or it's a zone that's held really well, or a lot of buyers coming in. I love using these areas when prices come back into them, because they tend to hold extremely well. And so once prices go back into these areas, I like looking for buys or sells. So in this case, at this point, when we were trending to the downside, in fact, at one point we were talking about this being a range, buy low, sell high. It still is. Sell high up here. We eventually broke the low, and so we were like, oh great, let's look for selling opportunities. This is a really good supply zone. It broke to the downside. This was a previous range, buy low, sell high. We smashed through it, and so I was like, great, that's okay. That's okay. Some people will be trading the breakout. That's fine. Your breakout wouldn't really be until down here, which probably you'd be losing money, which is fine. Okay, but still, maybe you make money on a smaller time frame. Okay, but I'm trading this once prices come back in. So once prices go back into it, I think we were talking about this on like a 1 hour or something like that. And then it's the same thing here, how we were trending in an uptrend, higher highs, higher lows, higher highs, higher lows. And then we start breaking the structure to the downside, and we make lower lows, lower highs. Actually, some people might be looking at this as a head and shoulders. So you got the shoulder, you got the head, and you got the shoulder, right? Some people, what they'll do at this point is when prices were like this, I see no problem, slightly aggressive given the fact of where the price is on the higher time frame, to be honest. But if you're looking at this on like a 1 hour time frame, see how I'm changing time frames? It's overwhelming, but this is why you pick a time frame that makes sense to you. And if you're looking at 30 different markets, it can be very overwhelming, right? But I'm trying to break it down to you. If for like a daily type of trade, I'm using a daily as a higher time frame, right? But if I'm looking for a quick trade, then maybe I use this 1 hour, depending on my time frame sequences. We talked about that at the start. So when prices were going back down into this area, I would be aware of like, hey, like I think longs are valid, but I'm also aware of like, hey, we got a head and shoulders pattern. When a head and shoulders pattern is being created, like it tends to sell off at this point, right? So some people will be looking for buying opportunities at this point. All right, some people will look for buys, maybe some type of confirmation in there. Confirmation could be the lower time frame structure that we've been talking about. Confirmation could be indicators turning on a certain time frame, could be this time frame, could be a smaller time frame, could be a smaller time frame candlestick pattern, could be whatever, right? Could be whatever. Longs are valid. Okay, we break it to the downside. Now I'm thinking in my head, okay, great. Now I've got this area of resistance. Let's draw a black line in there so you can see it better. Now we got resistance. We also got a little drop-based drop supply zone right here. So once prices come back up there, looking for shorts, we're selling this thing. Then you're going to have, once prices come up, you're going to have breakout traders trading this. Okay, first of all, you're going to have people trying to buy that. Then you're going to have breakout traders trading this to the downside. You're going to have people coming back up trading the breakout retest. Okay, straight up, they'll trade the breakout retest. You'll have people trading the regular confirmation that we've been talking about, or the other confirmation setups that we've been talking about. You're going to have people thinking, oh, this is the liquidity surge. And I like making fun of those guys. So you'll have maybe guys trying to buy this thinking it's going to skyrocket up, maybe. Maybe some of them that are inexperienced, this is a buy setup once it comes back up, and they're getting in early thinking it's going to skyrocket up. Different ways of trading, right? What's important is we're building a cake, right? We're trying to bake a cake about why prices are likely to go up versus down, okay? And you can see, I could be looking for shorts, then boom, I could be looking for buys, then boom, all of a sudden now I'm looking for shorts. I've got to be willing to adapt, right? Adapt, okay? Cool. I think you guys got it. So, same thing here. When we were coming back up into this supply zone, great area to be looking for shorts. In fact, there was a couple shorts that I know some people took in the program, which was great. But hey, let's get back on track of what we're looking at now. So let's delete all these drawings. Let's look at this on the daily. Man, this has been going a lot longer than expected, but hey, this is going to be a fire video. Hey, I appreciate if you guys haven't already, like the video. All right, subscribe. If you have any questions, let me know in the comments below. I appreciate that. All right, so let's continue. So yeah, if I was looking at this on a 4-hour time frame, like, hey, like I've got to be aware of this. Like, this is a really good area of 4-hour supply. All right, I'm scrolling out. I'm kind of getting a sense of where are these buyers stepping in. Like, I'm thinking in my head, like, okay, like previously I saw this as being a really good structure at this point, right? Really good higher. At some point I was like, oh, this is really good higher highs, higher lows structure right here, right? We come back, test it, we shatter through it. This is what I was meaning when I love these type of zones that go like this. And they go like that, and then they kind of like drop hard. I love looking at the retest into those areas like this. Really good supply, really good zone, okay? Really good zone. Comes back, tests it, sells off, comes back in, touching off of 200 moving average, coming back into supply, coming back into resistance. Great, whatever. Let's talk about what's happening now. So yeah, hey, looking for selling opportunities. You could be shorting the bearish engulfing. You guys know me, I'm just trolling. You could be selling the confirmation, right? Going down to smaller time frames. Do whatever you got to do, all right? But if prices come back into this area, hey guys, like this is a pretty good area of demand, like I ain't selling. If I see prices coming down to this, like, hey, I ain't selling this thing. I'm looking for buying opportunities, but I'm not just going to buy it straight up. The only way for me to buy it straight up, I mean, is if I was looking at it as a higher time frame perspective, like a weekly, daily, then it might be a daily setup for a swing trade. But I'm more interested in looking at smaller time frames. So yeah, this might be a really good area for looking for buying opportunities if prices return, right? We might see buyers try to step in maybe around this point, if prices come in around like this area here, eventually at that point, looks like we might have the 200 moving average crossing. I just have the 200 to throw out there and troll. All right, maybe you don't use it, maybe you don't. Maybe you do, maybe you don't. We got prices coming down into demand. We got prices react, not demand, but it'd be coming back off of kind of the corrective move. Prices bouncing off of the momentum line. Maybe longs are valid at this point, right? So that's totally true too. Trudeau. I just walked into that one, eh? It's Trudeau. And I'm not talking Justin Trudeau. Anyways, so yeah, that's different ways to play it, right? That's how I would be playing it if I was trading crypto. That would be my analysis. That would be my thought process. All right. That's what I'd be looking for. Either buying opportunities in here or buying opportunities in here. But I'm not looking for selling opportunities anywhere in here. The only time I'll look for selling opportunities is if prices say go down and from there we like drop off hard and then we sell back up into this zone, right? Then I'll look for selling opportunities back in here. Some people will trade the breakout retest, right? See how it's starting to add up here? We got a couple more things. One of the most important concepts I want to talk about, we're going to get into news next after this one, but understanding strength and weakness in the market. One of the most important. It drives me absolutely crazy when I see people, we talked about this slightly at the beginning, is understanding a market's strength and weakness. Is it strong or is it weak? We talked about metals at the start, right? And we were talking about how I don't want to swing short gold because I really like it. I think long-term, fundamentally, it's strong. It's in a very bullish move over the last couple of months. It's all-time highs. Why would you swing short something like that, right? That's very stupid. So when I see something like the Japanese yen is the worst performing currency over the last like 2-3 years. It's the worst performing currency. We look on a monthly time frame. This is the Japanese yen. Why would you try swing longing this? All right, on a 4-hour or on a 1-hour time frame there, but it's getting absolutely wrecking balled. Okay, you've got to be, sorry to say, but you got to be an idiot to try and buy this thing. I think if you're going to buy it, you would buy it on 1-minute time frames and you would be in and out of these trades extremely quickly. You are not holding these Japanese yen long trades for, an hour or 2 hours or a day. You're not doing that. You're going to be long a Japanese yen for maybe a couple minutes, right? Because this thing is just getting tanked. So if we look at, this has been the analysis for like the last so many years, looking at CAD yen or Aussie yen, like this thing has just been going up. And so especially over the last year, I've been just harping people. I've been calling people out saying, why do you keep trying to buy this thing? Or sorry, in this case, selling CAD yen. So you would be selling CAD, buying the yen, hoping that the Canadian currency weakens and the Japanese rises, right? But it's the same thing for Swiss yen, Aussie yen, New Zealand yen. Don't swing short. Don't go long a very weak market, all right? Without it already showing evidence, right? Which will take weeks on weeks to actually show you strength. But this is really important to understand of what's really strong and what's really weak, okay? So don't go off and think, oh, it's a good time to buy the Japanese yen on a 4-hour, expected to be in this trade for at least minimum a week to 2 weeks, right? When you're buying the worst currency in the world, almost. Not the worst in the world, but it's a horrible currency. You're just going to be losing money if you try buying the Japanese yen. I'm not saying maybe in a year from now I changed my thought process, but over the last, weeks and months, it's just, you lose if you're trying to buy this thing. So that just goes for in general, like counter trend trading is extremely, it doesn't perform as well as if you're trading with the trend or in a sideways market, right? So just be aware of what's really strong and what's really weak, right? And so this is why I am a big fan of, say, something like, you look at the S&P, I see people trying to sell the stock market, like swing trade the stock market, like the S&P or the NASDAQ. I get it. Like listen, man, I love the conspiracy theories. I love it. I think the whole market is a fraud. It's built up on a house of cards of lies, basically. They're rigging data. The Fed is rigging data. The government's just trying to do everything they can to prop up the economy and say everything is okay. The Fed is just injecting endless amounts of capital into the stock market. All right, creating inflation, devaluing the dollar. The only anywhere to get a return is in the stock market, right? This thing is just going up to all-time highs. If the stock isn't performing, They replace that stock and put in a stock that is. So the S&P, just in general, you look at this year over year, it's rigged to go up, which is cool, which is, you know, great. I mean, if you want your retirement in something that's going to go up, right? So don't go off and enter 4-hour swing shorts or daily swing shorts unless you're in a recession. All right. I have no problem looking for 1 minute or 5 minute shorts on a, you know, smaller time frame. But if I'm going to enter a 5 minute or a 15 minute or a 30 minute short on the S&P, this thing's got to be getting crushed for at least a couple days, right? That's the only time I'll consider. But then at that point, after it's been getting crushed for like 5-6 days, why would I want to short this thing? Because I know it's rigged to go up. Every time it drops, it just goes back up, right? So that's why I don't like swing shorting the S&P. If anything, swing long it, right? So if I'm going to trade a weak market, go against the trend, I'm going to do first off half risk, and second of all, I'm going to do a small time frame and manage the trade quickly, right? You should manage the trades that are counter trend or more aggressive. You should manage those trades quicker than if you're trading a better trade or a better position, trading with the trend or in a sideways market, right? I'm not against it, but it's just, you're just managing the trade. Every market's different. You've got to be aware of the price action, the market structure of what it's in. These are all things that you have to consider when you're trading the market. I'll consider looking for shorts. Like if I'm looking for 1 minute shorts and I think it's going to go down for the next 3-4 hours, I'm looking for 1 minute shorts to the downside. I'm not against it, but I'm not entering 30 minutes or 1 hour shorts, right? So I want you to understand that. Just keep in mind what's a strong versus weak market. One of the next things I want to talk about is really important, and it's going to go back to like break of structure and breaking previous highs and breaking previous lows. We're going to look at like the S&P and gold for this example, and it would have been, I mean, it still hasn't came back and tested, but there's a lot of value that you have to be aware of previous like really strong areas, like all-time high levels. You got to be aware of them on a chart, all right? But this is why, like, when prices were rallying, I got to scroll out so that you guys can see this. There were great areas of selling. Like, hey, like, I think shorts are valid here. I think shorts are valid here. I think shorts were valid up in here in this area, right? I think that's fine. Would I swing short these? No, I would not. I would scalp shorts maybe in here, maybe up in here, maybe up in here, all right? But I'd much rather go long, okay? So at this time, when I'm thinking of like all-time high levels or very obvious structure zones, like pivot points, I want to keep them marked out on my chart, because if I see prices rallying up to all-time highs, or in this case, just coming up into here in this area, this could be on any chart, not at all-time highs, but it's a very obvious monthly high or weekly high, I want to be aware of it, because I probably don't want to enter a long position, right, going against this. So I don't want to enter a long position when prices are up there. Okay, I'll wait. Honestly, I could look for shorts, but I need to wait for confirmation, right? We talked about confirmation. I'll wait for the breakout and then I'll get long, right? That's something I'll do, okay? But what I want to focus in on is I want to be aware, just a side note, like those zones that we've talked about them, we've kept talking about them, how good these areas are that break the previous structure areas. Like they hold up well, but you just don't trade them straight up. Like I wouldn't just, this is a great area to be looking for buying opportunities. I like it. I'll consider looking for buying opportunities. Maybe it fails, maybe it holds for a little bit. I don't know, I don't care, whatever. But hey, it's all-time highs. We got, you know, higher high, higher low, correction. Good time to be looking for buying opportunities. That's what I'll be thinking in my brain. But it's also a level, rally-based rally demand. It's also a level that shattered through an all-time high. This is on everyone's radar. Everyone's aware of this level. So that's why I like it. As a support, as demand, correction, time. Like I said, we're trying to bake a cake, right? And then we're looking for the confirmation, okay? Honestly, it's not a bad area just to like set and forget, because this thing just goes up all-time highs, right? Anyways, so I want to talk also about the importance of closing, because the reason why I like that zone also is because of the close. Notice how prices shattered above it. All right, it blew through it, and it didn't just wick above and then reverse. It blew through the zone, and then it had a strong close. This is why it's so important. You'll see it on the news and headline. We're going to talk about news and fundamentals. But knowing that prices break the highs and lows and they close, right? Does it close above or below the structure? That's very important for the type of trade and how good the zone is. Because if it just wicks above it, it's nothing too special. Okay, it could still be valid. Like in this case, I think silver, if we looked at silver, I would still use this area for a sell-off. I mean, first off, if we look at silver long term, we're testing all-time high levels. Like this is on everyone's radar on silver right now. This is like wick central. Like we've never closed in this. Actually, we've closed there. Tomorrow is actually going to be the first close potentially, as long as it doesn't sell off, being Friday. As long as it doesn't sell off hard, which it could, but I'm not saying it will. We've never closed in this area, and it's had 1, 2, 3, 4, 5, 6. It's had 8 weekly candlesticks touched in this area. It's never closed in this area. That's an area of really good resistance / supply that a lot of people will be looking for selling opportunities. Here, I wanted to talk about this area because this was a really good 1 hour, 4 hour zone that I liked. All right. I really like it for selling opportunities. Nice area. Prices coming back into it. Some people might be thinking, oh, it's removed it. It's broken. All right. Once again, we haven't really closed above it. All right. So I'm not too concerned about it. I don't mind prices breaking above as long as it doesn't close, right? That's really important because I see people all the time coming to me like, oh, I got the confirmation you talked about, but I'm like, it didn't close strong. Yeah, you got, the zone being removed, but it didn't close, right? We want to see a strong close. That's really indicating to us that a lot of buyers or sellers stepped in and it was able to hold against those traders, okay? Because you know what? This is still showing me weakness. It came up, rallied, but it was never able to close. In fact, a lot of people will be looking at this top-down analysis. They're looking at this as like a reversal pin bar or something like that. And right, they're entering short. That's another way traders will trade this. Top-down analysis, reacting off of all-time high level, reacting off of supply, rejected the area, never had a strong close. It's a reversal pin bar. And what they're doing is they're entering on that next candlestick with their stop above the zone. That's one way of their confirmation. And then, some people will get out at 1-to-1, maybe some at 2-to-1. Some people might hold their trade until down here. So many different ways you could manage the trade, but that's just another trade setup right there that people would be into right now. Okay. Some people are waiting for, the 5-minute confirmation, which was right here. We never got the pullback, but prices came up into the area. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Boom. Right? Boom shakalaka. And that was the zone. Okay? We just missed it, unfortunately. So just missed. So, hey, maybe there's no trade. But if prices go back up here, it's probably a very weak sign in my opinion. I don't really want to see that because now, we're kind of going higher high and higher lows. Like if at this point we go up here, then you think about it, price action, prices come back down, reacting off of this potential pivot point, which is also demand, also above the 200 moving average, and it's going to go higher, right? So this is, don't get me wrong, fantastic area that I would consider looking for selling opportunities in, but do I see this being the zone that takes it all the way down? Not anymore, okay? I think it had its chance when it was over here, right? Because I really don't want to trade a 5-minute zone the next day, right? Completely different sellers are involved in here. But a lot of people are going to keep an eye on this because it was yesterday's all-time high, all right? Not only that, a lot of people are looking at it because it's going to be the strongest close in silver over the last how many years? I think 20 years or something. Not 20. I don't know. I could figure that out. Since 10 years. Over the last 12 years, it's going to be the strongest close in 11 years, which is huge for silver because it's lagging behind gold right now because gold has already broke up. So these are all things that register in my brain. All right. Great areas depending on the time frame sequence, right? And I know you may be thinking, man, this is confusing. Hey, man, I told you at the start, it's going to be clear as mud. You're going to learn just enough information to get yourself into trouble. It's just price action. It was so obvious, and then there's scribbles everywhere, right? But you got to be willing to adapt, okay? Starting with the top-down analysis, we have to talk about news and fundamentals because I get asked this question sometimes, and they're like, well, how do you trade news and fundamentals? One of the hardest topics to actually talk about is news and fundamentals because, like I was kind of talking about Jerome Powell and CPI numbers and inflation and interest rates, it's all skewed information. It's built on the market's stock market is how it keeps going all-time highs when we're in a crap economy. You know, it's built on a house of lies. So all the data that's coming out is like completely rigged from what it used to be 10 years ago. And that data is different from what it was 20 years ago, right? And so they just downplay everything. And the Fed is just trying to keep the stock market high. And the government wants the stock market high because it's the only thing Joe Biden can really rely off of, saying, hey, you know, yeah, inflation might be bad, but hey, look at the stock market. We're at all-time highs. Ha, ha, ha. Right? The way that I would approach this conversation, you have to understand strength and weakness. You have to be aware of what's going on in the global economy. If you're trading oil, you have to be aware of what's going on in the Middle East. Those guys control what's going on in oil, what's going on in the wars, right? And so this is never something, it's the same thing as price action and stuff like that. Understanding news and fundamentals. It's one of those things because you got one side, people will say this, on the other side, they'll say this. Who is right? And the deeper you dive into this, into trading, you're going to realize, if you're new, the whole world is a scam, basically. That's what you're going to realize over time. Everything's built up on a house of lies, right? The information data, what is good turns out to be bad. What is bad turns out to be good. How do they interpret it? What's important is to understand what's going on in the global economy. What are some resources to look at? And we're going to talk about this for a second, because it's really important to understand, because most people blow their accounts by trading news, okay? And they think, oh, that's how you make the money. It's so unpredictable, okay? Everything's already priced into the market. I've actually made a video talking about what happens when news is released. And I tell you, and I actually break down the order book, and I'm like, here is what's going on 20 minutes before the news. Here's the order book. Here are all the trades. This is the average. What's happened 1 minute before the news, and then what happens right when the news comes out, and you see the order book changing and flickering. It drops to 0. Nobody's trading 1 second before. The spread jumps from 1 point up to 20 points, right, during that news announcement. Then it spikes one way, then spikes the other. You're not going to make money consistently trading the news. I don't care who you are not going to trade. I've never met a trader that can do it consistently. Sure, you might get lucky on a couple, but sooner or later you're just going to blow the account, okay? But what you have to do, the way that I want to approach this conversation after I've said all that, one of the best resources you can do, zerohedge.com, kind of updates you on what's going on around the world globally and how the markets are doing. That's a great little news source for you. Also, Forex Factory is important to be aware of what's coming out every single day. I avoid any major news announcements. So anything that's coming out for the day, I always check this thing first thing in the morning. I want to be aware of what's coming out. So if I go, I'm going to change this to, just major news only. What's coming out Friday? I got no news coming out Friday. I think it's a holiday next week, so it's probably going to be like little to no movement. But if I was aware of, yesterday, I've got to be aware of core CPI numbers, inflation data, okay? How is that going to affect the market? Because people want to know, what's CPI? How does that affect the market? What about an interest rate? What does it mean if interest rates go up versus interest rates go down? Google. We got the power of the internet, okay? And in fact, I think I did it right here. How do interest rates, instead of me skewing up everything, you could just type in, how do interest rates affect the stock market, right? It will tell you. How do CPI numbers affect the market? What does it mean if CPI numbers are higher than lower, right? Instead of me sitting here explaining, well, this is what it means, because I believe in something completely different. Because if you're new versus once you're a year, 2 years into this, you're going to have a completely different mindset, because you're going to realize everything's a scam. They're faking the numbers. They're skewing the numbers to make it look good. And then you realize, oh my God, this is why the market's at all-time high. Oh my God, why isn't this market up? Why is that market doing so well when it's absolutely the worst and it's in a recession? Because it makes no sense, right? You learn that over time, right? The saying, when you're a kid, you're a liberal when you're a child. And then once you start paying taxes, you turn into a conservative. It's the same thing here. You just realize the whole market's a scam, all right? And so Google could be your best friend on something like that. But when it comes to news and fundamentals, I've done a video on that before, understanding, avoid all trading. Unless you're swing trading, it's something that you have to deal with, right? But I wouldn't have pending orders on anything 30-minute or below. I would wipe all my orders. If I'm in a position, I might consider moving it to break even, my stop, or closing it all together. Maybe moving it to break even, or not entering a trade. But I wouldn't enter trades. I would not enter new trades, okay, on a smaller time frame going into that news. Unless I'm already in, I might move it to break even if it's heavily in my favor. It always depends. It's something I can't tell you, and it's just magic. It's a magic formula. Okay. But that's one thing I would recommend. Zero Hedge, great news article to read up on what's globally. It's always important. You're a trader. You've got to be aware of this stuff. All right. Pull it up on your phone. If you're in class, you're at work, read Zero Hedge, read CNBC. Just be aware of what's going on. Be aware of what earnings is coming out. Walmart came out with earnings. Cisco came out with earnings. Apple came out with earnings. All right. How is that affecting the stock market? You might want to be aware of a couple tech industries are coming out, with earnings this day. Well, you might want to be aware of the NASDAQ, right? That's going to affect the NASDAQ. Okay. I watched a little bit of Gregory Mannarino, maybe some Peter Schiff. So one of the major things that is going to turn a trader into a profitable trader is a little bit of everything that we talked about so far. And I want to talk about the confidence and the knowledge, because this is a lot of knowledge, but how do you build that confidence? How are you going to journal and review? Because this is all stuff that you have to do, right? If you want to take a trade, how do you have the confidence in that? Well, the confidence is going to be built over time of you seeing the same trade setup. It's going to be built over back testing, having confidence in the setup, right? You just see the setup work over time. You're aware of what you're looking at. You know the core trading strategy. That's why I give it out for free. My trading strategy, it's on my YouTube. Full tips playlist, that will be in the description below. A big thing that traders are going to make the transition from struggling to break even, from break even to consistently profitable, is going to be the journaling and review process, right? So this is something I do. And so our Sunday meetings is when we are going over weekly prep, like we've been talking about, coming up why we want to look for buys here or sells here, any watch list idea. And then our Wednesday meetings is where I look at people's trade review and I kind of go over what's a good trade setup versus a bad trade setup. And so this is why journaling is important. You journal and then you review. How do you expect to get better if you don't journal then review your trades? You have to be doing that, because you'll notice these little things about what a good trade setup is versus a bad setup, right? What's your win rate when you have these 4 things every single time versus if you have these 3 things, right? How does that affect, right? This is why I emphasize so much on journaling your trades and reviewing, because that's going to let you know that this one thing that you're doing is costing you 80% of your losing trades. So you need to get rid of your losing trades, and you need to get rid of this one thing to help you remove those losing trades. It's extremely important. Okay. So that's something I do with all my traders directly one-on-one in the program when they work with me, right? I give everything out there for free on my YouTube, but become a profitable trader, they come to me to how to actually implement this stuff, right? That's why people come and work with me directly in the Moneyball trading program, where the whole goal is to become a consistently profitable trader in 90 days. And so if you guys would like to work with me and become a profitable trader, that's going to be in the description below, moneyballtrading.com. You can also get a free trading ebook covering my trading strategy, as well as a masterclass on how to become a profitable trader. And in fact, everything that I've mentioned in this video, I'm going to send it in the emails. Okay, so keep an eye out for that if you would like to be part of the program and take advantage of that masterclass. So that wraps up everything. This might be a video that you have to go back and watch again, because it was very difficult to go over everything, but having that core trading strategy is extremely important. Understanding price action, market structure, what are other traders looking at, understanding the pivot points, the strength and weakness. This is all things that have to register in your brain, and it might not be something that you pick up right away for a new trader, but it does for a later trader, right? And I'm telling you, everybody in the program that I work with is going to say this was actually an amazing video. I laid it out all on the line. I wish I could go into a lot more detail on some other things. It would just stretch this video on to be a longer video. So I appreciate if you guys like the video, subscribe, and if you guys would like to watch my trading strategy in 10 minutes or less, that will be above my head right now. So check that out, and I will see you guys in the next one. Cheers. Bye-bye.